Money is a part of our lives every single day. Literally, you wake up, you go and brush your teeth, you eat breakfast, you make yourself a coffee, you go to work, you get home from work and you throw on a show on Netflix. Every single one of those actions involves spending or making money. Even if you try to keep your life simple and even low cost, you're still spending and making money to a certain extent. And what's crazy is that there's a few different factors that impact you and your money every single day too, that we don't really talk about very often. In our opinion, there's 4 major players that are involved, and some are more visible than others. There's the government, the bank, the corporations, and the people around you. And all of these players aren't created equally. Some impact you more, some impact you less. Some you have a say in, and some you don't really have a say in. But what's important is that you know why and how these 4 things impact your money and your life every single day. The first major player is the government, which might be one of the pieces to this money systems puzzle that's actually the most obvious to you. But some of the specific actions that the government takes that impacts your money aren't always as obvious. Basically, the government's in charge of what's called fiscal policy. They pass bills and legislation that impacts the economy. Now, picture the economy as a big Where's Waldo. You know those pictures that have a lot of different stuff going on and you're supposed to find that very specific man with the striped hat? In this Where's Waldo, there's people at work, making money for themselves and also for businesses. Then there's people at the grocery store, paying money for food and also making money for that business. Then there's a factory that's producing cars, which creates jobs and also generates something else to make more money. And then there's the government, who's creating rules or programs and spending money that ideally keeps everything else running smoothly. Now, the reason that we feel the government's impact more than some of these other factors is because there's a direct exchange of money for services. What I mean by that is that the government makes their money by collecting taxes from people within their country, and people pay taxes in exchange for specific benefits. Now, who we collectively vote into office determines exactly what those benefits are, but no matter what, there's a set amount of money being paid to the government and a set group of benefits being given to the people. Now, one thing that the government does every single year is set a federal budget. Just like how I make a budget every year that shows how much money I plan on making and how much money I plan on spending, the government does the exact same thing. And what they decide to spend on is based on how they want to influence or support the economy that year. It kind of sets the tone for everything. In Canada, the federal budget is prepared in Ottawa by the Department of Finance and the Minister of Finance specifically. Now, we were actually invited to attend Canada's Federal Budget Day this year, and we got to see the behind the scenes of exactly how the process works. After the budget's created, they set a day to announce it, and this also happens in Ottawa. So after flying in and heading to the Parliament buildings, we got to actually read a copy of the budget book in advance. We then got to go to the press conference and hear the Minister of Finance speak, and we got to go to the House of Commons to watch the budget being read to all of the elected officials in Canada. The budget itself mostly focuses on the ways that the government's choosing to spend money that year. They pick their main priorities and then they build programs or credits or other things that help them work towards those priorities. For example, this year there was a big focus on affordability for Canadians. So there's a new grocery rebate and also a new dental care program, which are just 2 of all of the different areas that get some money allocated to them. Now remember that all this spending has to come from somewhere, like the taxes people pay. But the income and expenses columns don't always line up. Sometimes the government makes more than it spends, which creates a surplus. But more often than not, the government spends more than it makes, which creates a deficit. Now, when they need extra money that doesn't come from taxpayers, they take on loans, which gets added to the country's national debt. So the yearly overspending is the deficit, but that then gets added to the total national debt.
Okay, so the next player that impacts your money is the bank. Now, in countries like Canada and the US, there's the central bank. So this is the one overarching bank that handles the distribution and creation of money for a country. Now, unlike commercial banks, so the banks that we keep our money at, there's just one central bank, and they have a monopoly over this. Now, the central bank is actually a really big deal when it comes to impacting your money. It just isn't as noticeable as the government. But just like how the government controls the country's fiscal policy, the central bank controls the country's monetary policy. In this case, their main job is to control how much money is actually out there, either by printing more money or by taking money out of circulation, and by adjusting interest rates up or down in order to control inflation. Inflation is basically when things get more expensive. This makes our money less valuable and ultimately buys us less things. It's kind of like how in 1970, a cup of coffee was 85 cents, but today, that same cup of coffee is $1.85. Now, here's the thing. If your salary went up and actually matched those price increases, it's kind of like everything actually stayed the same price. Now, if it didn't, if your salary hadn't gone up, which historically we know it hasn't, then that same amount of money would buy you a smaller amount of coffee over time. Now, some inflation is actually good for the economy and it even keeps it running, but it has to be low and consistent inflation. And it's the central bank who has to make sure that that's what's actually happening. See, back in 2020, so at the beginning of the pandemic, it was actually the central bank that printed all that additional money for the government to then give out in the form of stimulus checks. See, it was the government that you noticed, but there was this whole other player involved too. Now, over this past year, the central bank's actually been increasing interest rates to try and lower inflation. Now, at a high level, increasing interest rates means that customers will get more money from their bank if they save their money. And if they save their money, it means that they're spending less money. And if they spend less money, it means that demand will go down and prices will also follow and go down too, which ultimately brings down inflation. So overall, there's fiscal policy that's controlled by the government, and then there's monetary policy that's controlled by the central bank. Now, this particular player, so the central bank, has a really huge impact on your money because they set things like inflation targets, which once again can have a really big impact on the salary increases that you're seeing at work and the price of the things that you want to buy with the money that you're earning at work.
That brings us to talking about the next player, which is the corporations. The companies that you work for and that you buy things from have an impact on your money too, and some of that impact is kind of obvious, like the fact that your job decides how much money you make. Now, cost of living adjustments, which are those small salary increases that you get to keep up with inflation, those are technically impacted by current inflation, which is influenced by the central bank. But other salary increases that you get outside of those little adjustments, those are based on your job, how much money they make, and their budget. Then there's also the fact that companies that sell products or services to people play a part in the prices that you have to pay. Now, supply and demand definitely has a big impact too, but in general, how much profit they want to make is decided by them. Now, those are the more obvious ways that corporations impact your money, but they also do it in more quiet ways too. One way is through lobbying, which is basically when someone tries to influence a politician to make decisions that will benefit them. And a big example of this in Canada is the milk sector. Seriously, milk has been trying to lobby the government for years now. And there's a lot that goes into this, but one of the biggest things that they're trying to get done is to make sure that there isn't as much international competition for milk production. And they have spent millions of dollars lobbying the government, which really is a good example of how big corporations, or big industries in this case, can use their money to impact your money. Another way is through how they set their prices. Over the past few years where we've seen high inflation, there's been studies that show how corporate profits have disproportionately contributed to higher inflation. Look at this chart that shows how in the past, corporations took an average of 11.4% of revenue as profits, with the rest of the money going towards paying workers and for other expenses. But over the past 2 years, there's been a massive switch, with corporate profits now accounting for 53.9% of revenue. There's definitely a bigger conversation to have about corporations' impact on economic growth and job creation versus the negative impact that they can have on the economy. But either way, corporations definitely have a big impact on your money and also on the money systems that we interact with every single day.
The very last player that impacts our money are the people around us. See, all the other players that we've covered so far are all a part of our money systems, and the control we have over them is based on our knowledge of what's happening, who we vote for, and who we buy stuff from. Now, the people around us, these are the players that we actually have the most control over. See, I look at it like this. In our lives, most of us are surrounded by our friends, our family, our colleagues, and of course the entertainment that we consume, whether that be in the form of movies, books, TV shows, or even content creators that we see on social media. Now, the thing is, our perception of money and how we go about saving or even spending it is highly tied to what we're taking in on a consistent basis. If money was tight growing up, or if your parents were stressed out about it, or even if they were scared of debt, then you might take on those bad, fearful feelings too. If your friends are focused on spending money, they want to go out, they want to keep up with whatever's trending, then you might be pulled in that direction as well. If your colleagues are talking about who makes the most money, then you might want to start making more money yourself. And if you're watching people whose job it is to sell you things, then you might start buying whatever it is that they're selling. Basically, your surroundings have a huge impact on you. So on top of the government, the central bank, and the corporations deciding how your financial life will go, the people you have around you really do sway your decisions when it comes to the money you do have in your pocket. So it's up to you to really decide who you want around you and who you'll listen to. And if you want to hear more about how another money system could be coming to an end in the near future, check out this video next on what a cashless society would look like. And yeah, with that being said, we'll see you next week. Y'all already know the vibes, and let's go.